Hey everybody, it's Daniel here from InfoVest. Hope you're all doing well. So, I don't know if you've been looking at the markets, but we got two important events that happened today. We had the Consumer Price Index, the US inflation report came out in the morning, and we had the FOMC meeting. They came out with the statement, their projections, the dot plot, and then the presser after a half an hour later. Two important events, and I'm going to talk about it today and the importance of it going forward in the US economy. First things first, we had US inflation numbers come in lower than expected, basically showing signs that inflation is improving here. We're seeing weakness in certain components. We see that obviously the commodity side of things, oil, energy, and so on, go into negative territory. You've got disinflation there. You've got new vehicles showing also disinflation, or I should say actually deflation there. So if you're looking for vehicles, you can start to see that those prices are coming down lower and lower. Why? Because the consumer are not taking more debt, high interest rate debt to loan out cars. In fact, many of them are probably returning the cars or trying to sell them to get rid of that burden. Now, when you look at the overall report, it has come down lower. When you look at the month over month, came in at 0, which is very interesting because what we want to see later on for this inflation to really get weaker and weaker and come down lower to the Fed's target is we want to see this disinflation turn into deflation, which eventually it will when we see some sort of weakness, very weak data points and weak economic trajectory in the economy. When you see weakness in the economy, you will eventually get that. What I'm basically saying is when you see a recession, you basically see that deflation component happen. That's when you see deflation. So the only thing that was up really that was significant was the shelter component. So that ended up being higher than expected, although the other components were lower. We are eventually going to see shelter also come down lower, in my opinion, but that will be on the basis of, like I said, recession. Okay, we're headed towards weak economic growth, right? We're not going to be seeing strong economic growth or anything like that. We're going to see the data, the growth data, the economic forecast, the economic data points that come out monthly start to see weakness. And you're going to eventually see that in the jobs number as well. So that is yet to come. And you're seeing that in the inflation report, right? We get low inflation, weak inflation when there's a weak economy, and you get disinflation when there's demand getting worse off. And obviously, if you get a black swan event, recession type style like 2008, 2000, and so on, then yes, you can get even deflation. And yes, the shelter component can also come down. Lot of risks out there, like we've been talking about many times on this channel. Commercial real estate, and the mortgages that are coming for renewal at the end of the year next year. This is all problematic for the commercial real estate market, which can have spillover effects. Let's not also forget also other countries out there like China, Canada, and so on, Europe, that are also feeling the demand crunch as well. And Canada and Europe, the European Central Bank cutting rates, that's just also another sign there that they're starting these preemptive rate cuts for a reason. Now, we got to talk about the FOMC meeting, okay? That was really important. What a disaster. That's what I would first start off with. What a disaster, because we had flip-flop from Powell. Complete flip-flop. We had Powell in the last projection say that we're going to see 3 rate cuts. He came out with the new projection saying that we expect only 1 rate cut. Okay? And he said a couple of things as well, saying that not everyone majority of the people did not really vote or put in their projections after the CPI report, after receiving the CPI report. So the one rate cut is on the idea, this is basically pre-CPI. And when we saw data before CPI, like the non-farm payrolls report, it came in stronger than expected. So the fact that Powell acknowledged that hey, that many participants didn't really adjust their forecast after CPI, just goes to show that he can completely flip again. So the dot plot, the projections, everything that Powell's saying is not to be trusted. He keeps flip-flopping like a pancake. I gave him a nice nickname today, PP, Pancake Powell, who likes to flip and flop all the time, right? So we've seen this before from Powell saying that we're going to cut rates aggressively. Come out now, not going to cut rates that aggressively, looking at penciling one rate cut. We've seen this in the past where Powell said we're going to hike, didn't really hike, over and over again. Clearly tells me the FOMC, Powell, they have no idea where inflation is going to be, what it's going to look like, what's going to happen, and they're just completely lost. Okay? Why am I saying this is because we are literally one data point, one economic data point away from Powell going back to saying 2 rate cuts or 3 rate cuts, right? We're seeing the weakness in CPI. If we get more weak CPI data, if we get the next non-farm payrolls report ending up coming in weak, and let me tell you something about the non-farm payrolls report, which is, for those who don't know, it's a report that measures jobs in America. It comes out from the BLS, right, from the US government. If that number comes in weaker, right, we can see the market start to price in more rate cuts, and Powell will again, PP, Pancake Powell, will flip and say, okay, we're doing more rate cuts all of a sudden, right? So another thing that Powell said today was that he wasn't, that the last jobs report, he said that was overstated. Last non-farm payrolls report was overstated. Basically kind of acknowledging there that the last report that looked so amazing and good, he's not taking that into real consideration and saying that that is overstated, thus we shouldn't really weigh too much that the jobs market or the economy is doing fine. Because the other reports like ADP and ISM and so on, they came out more on the softer side of things, right? The fact that non-farm payrolls, if you look at the establishment survey, it tends to double count things and make things look amazing, right? And Powell acknowledged that. So the fact that, economy looks fine, it's not true. And I've been saying this on this channel again. If you look at the household survey that doesn't double count things, that is showing weakness there. The other thing, from the non-farm payrolls, from my last video, I talked about the unemployment rate. How is it that the non-farm payrolls report looks better, but the unemployment rate is ticking up? So you're telling me more jobs, but more people are unemployed? Very interesting, right? So what I would say there is you have more of these full-time people moving to part-time because they're losing their full-time jobs, going to part-time, and thus that looks like there's 2 jobs available, thus double counting, thus the non-farm payrolls looks better. Again, Powell said it's overstated. That report is overstated, right? So other than that, there's much more things that Powell said in the presser as well. He also came out to say that, hey, these projections, we're not so confident in them as well, right? He didn't say it outright like that, but to translate, he basically said that he doesn't really even believe in these projections, basically telling you to stop believing those projections because why? He simply does not know, right? Now with elections coming up, US elections coming up, things can definitely get political. Who knows? Maybe he might cut rates by September. Again, because of elections, right? So the probabilities of rate cuts in September is about 70%. So it dropped from 80 After Powell, before Powell, it was 80%. So after the CPI report, it was 80%. And then when Powell came out and spoke, it dropped to 70%. We had the stock market go up on lower CPI report. It had a little bit of sell-off on Powell's hawkishness. We had the bond market also sell off a bit. But the stock market basically picked back up at the end of the close, basically shrugging off Powell's hawkish comment and calling Powell's bluff. No way that you're not going to cut aggressively or cut more than once. You are going to cut because guess what? Weak data is inevitable. It's inevitable. It's going to come eventually. And when that comes, guess what? Pancake Powell is going to flip-flop again and start cutting more than expected, right? And you will see that change. All you have to do is wait now. Now it's just a timing game where you have to analyze on a monthly to monthly basis of the data. I'll post about it here on this channel. You'll hear it from me. I'll talk about it often. And when we start to see those numbers really deteriorate, then guess what? Pancake Powell is going to flip and we're going to see those more rate cuts kick in, right? And let's not forget, these countries around the world, especially the G7, they're quite globally coordinated. When one or two central banks starts to cut, guess what? The Fed's eventually going to follow. Now, worst case scenario, Pancake Powell is just out of his mind and he does not decide to cut and things get worse off. There is another policy error. He's too late in terms of cutting rates. Then you can definitely guarantee that you're going to see massive deflation and plunge in asset prices. And you can guess what happens next, right? So anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video. And I'll see you guys around. Cheers. Bye.